Over the past 3 to 4 years, Dubai's property market has seen a very strong run. Prices have increased, rents have increased, transaction volumes have increased, and naturally, that leads to one question that I am being asked more and more often. Is Dubai property overvalued in 2026? Now, to answer that properly, what we need to do is step away from the opinions and rather take a look at the data, the facts, because price growth on its own does not mean that a market is necessarily overvalued. A market becomes overvalued when price disconnects from the fundamentals, meaning that the price rises faster than the demand, than the population growth, than the rental income, or even underlying economic drivers. So the real question is not have prices gone up? The real question is, are prices justified? Let's start with price growth. According to data from firms like CBRE and JLL, Dubai residential property prices have increased, roughly 60 to 80% from the 2022 lows to early 2026. In some areas, that growth has been even more aggressive. Palm Jumeirah villas, for example, have more than doubled in value since 2020, and certain waterfront and branded developments have seen similar levels of appreciation. So yes, prices have moved significantly up. There is no denying that. But price growth alone does not equal overvaluation. So the next question is, what is driving that growth? Let's look at the population. Dubai's population has grown from approximately 3.3 million people back in 2020 to just over 4 million people in 2025. That's an increase of around 700,000 people in just 5 years. Now, to put that into perspective, that's the equivalent of adding an entire city the size of Frankfurt into Dubai's population in a very short period of time. The equation here is quite simple. More people coming in equals more demand for housing. Now, let's look at transaction activity. In 2020, Dubai recorded over 35,000 total recorded property transactions. By 2023, that number had already exceeded 130,000 transactions. And in 2024, Dubai recorded over 420 billion dirhams in real estate transactions across the board. Fast forward to Q1 of 2026 alone, and the market has already recorded approximately 252 billion dirhams in transaction value. Now, that's almost half the total transaction value, all of 2024, in just the first 3 months of this year alone. Now, think about that. If this market was truly overvalued in a broad sense, actually, you'd expect the activity would slow significantly. And this tells you something important. This isn't a market where activity has dried up. This is rather a market where liquidity is still very, very strong. Now, here's where it gets interesting. Transaction volume has not grown at the same pace as transaction value. So prices are actually rising faster than the number of deals that are happening on the ground. And this is where you need to start paying attention, because this is the point where markets shift from easy growth to more selective growth. Now, let's look at the rental market. People who are renting are doing so to live here, not for the purpose of investment. So the rental market actually tells you whether the demand that we've referenced is truly real, whether it's plausible to have that level of demand in this sort of a market. So let's again take a look at the data. Between 2021 and 2025, the rental prices in Dubai increased roughly 40 to 70% depending on the community in most areas. In some villa communities, these increases were even higher. And today, gross rental yields are sitting strong between 5 and 8% across much of the market. Now, the best way to understand that is to compare that globally. London, for example, typically delivers around 2 to 4%, whereas New York delivers around 3 to 5%, and Hong Kong is often even below the 3% mark. So even after the price growth that this market has experienced, Dubai is still generating significantly higher, stronger income returns than many comparable markets around the world. Now let's talk about price per square foot, because this is where global comparison becomes very, very clear. In Dubai today, prime apartment areas are roughly trading, for example, in Palm Jumeirah, around 3,500 dirhams per square foot. In downtown Dubai, just shy of around 3,000 dirhams per square foot. In DIFC, again, you're looking at around 3,000 dirhams per square foot. Dubai Marina, slightly lower at around 2,000 dirhams per square foot. Bearing in mind that this is an average of data across these communities and looking specifically at apartments. Why apartments? Because the price per square foot of these is a lot easier and more accurately able to be compared to other markets around the world. So let's now compare these prices to global cities. Let's use prime central London as an example. It's around 5 to 8,000 dirhams per square foot when you're looking at equivalent areas compared to Dubai. New York prime is around 6 to 10,000 dirhams per square foot, and Hong Kong prime actually often exceeds more than 10,000 dirhams per square foot due to the constraints of space in the area. So even after a strong run and multiple price increase cycles, Dubai is still trading at a meaningful discount globally. So let's go deeper, because the real answer as to whether Dubai is overvalued sits in the details. Let me give you a few real case studies to really exemplify the point that I'm trying to make. First, let's take a look at villas, because this is where we've seen the most aggressive growth across the market. According to data cited by Fitch Ratings, Dubai villa prices rose around 60% between 2022 and early 2025. But here's the nuance. Villa supply is limited. You cannot easily replicate overnight an entire villa community, or the Palm Jumeirah villas, or Emirates Hills as a community, or even Dubai Hills Estates' large plot sizes. And because of that, scarcity is driving the increase in pricing. In Q1 of 2026, Palm Jumeirah villas were trading around 6,400 dirhams per square foot, Emirates Hills around 3,500 dirhams per square foot, and Dubai Hills Estates villas were actually around 2,700 dirhams per square foot. So yes, these can be looked at as relatively high numbers, but they're also, again, as I mentioned, being driven by scarcity and not just speculation. There is scarcity in the number of villas on the market today, including the upcoming projection of the number of villas coming onto the market, and as a result of that, the prices are being actively driven up. And that distinction really matters. Now let's look at apartments. Dubai is still relatively affordable globally, but locally, in my opinion, it can no longer be classified as cheap, even though I hate that word cheap. If you bought in 2020, today's prices may feel expensive to you. But if you're coming from London, New York, or Hong Kong, where we've just compared some of the price per square foot and transaction data, Dubai still looks incredibly attractive. So value very much here depends on your perspective. Now let's bring in another factor, the cost of ownership, because this is incredibly important if you're looking at this from an investment standpoint. In Dubai, there is no income tax on rental income, no capital gains tax on sale, and relatively low ongoing holding costs compared to many other global cities. In London or New York, for example, you can easily lose 30 to 50% of your rental income just to tax and overhead costs alone. So when global investors compare these markets, they're not just comparing the price, but they're actually comparing the net return of what they can achieve through that investment. And on that basis, Dubai is incredibly competitive. Now let's talk about supply, because this is one of the biggest concerns that people who come to me have. Dubai has a significant development pipeline. This can be a great thing. However, because thousands of units are being scheduled for delivery over the next few years, this naturally raises concerns around oversupply and whether or not supply is outpacing demand. The key question here is not how much supply is actually coming into the market. It's whether the demand can absorb that supply. Based on current population growth, transaction volumes, and rental demand, there is no evidence of an oversupply across the entire market. But, and this is an important but, supply is not evenly distributed in any real estate market in the world. Some areas and segments will feel pressure, such as mid-market apartments in areas where there are many similar competing units, and other areas will remain constrained. Now let's address where I believe that the market is starting to stretch. There are definitely areas and segments where pricing is becoming somewhat aggressive. Branded residents are one good example of this. Take a look at the number of branded residents that have come into the market in the last few years. It seems like every single developer is jumping on the bandwagon and partnering with a new brand to develop a new residential project to sell it out. In many cases, these are trading at 30 to even 40% premiums over comparable non-branded properties. Now, sometimes that premium is justified through service, design, and positioning, especially when the brand is not just a logo that's slapped on the front of a building, but rather it's a brand that carries its own weight and adds its own value and quality to a project that would otherwise not be achieved in a comparable non-branded product. But sometimes that becomes emotional pricing, and that's where investors need to be careful. Now let's bring this all together. Is Dubai property overvalued in 2026? If you take a look at the data across population growth, transaction volumes, rental performance, global price comparisons, and tax advantages, the overall market is supported by incredibly strong fundamentals. However, this is no longer a market where you can just buy anything and expect it to work. The easy money phase of this market is over. It's a market where selection matters, timing matters, strategy matters, and who you choose to help you to navigate that market matters now more than ever before. And this is where I see the biggest difference between investors. The inexperienced investor asks, is the market good or bad? The experienced investor asks, where is the opportunity within the market? Because even in strong markets, there are overpriced assets. And even in expensive markets, there are still opportunities. So if you're asking me whether Dubai is overvalued, I would actually reframe the question. And instead of asking, is everything too expensive? Ask, where is pricing justified and where is it not? Because that's where real returns are made. So to close this properly, Dubai in 2026 is not a cheap market, but it's not an irrational market either. It's a maturing market, a more selective market, and a market that offers incredible opportunity for those who understand how to navigate it properly.